Roku just posted its earnings for the first quarter of 2022. In this video, I'm gonna go through the KPIs, risks, free cash flow, valuation, and in the end, I'm gonna give you 3 things to keep an eye on to see if the stock is a buy. Roku is the second position for Katie Wood's ARK ETF, so let's see what's interesting about this business. Before we start, please remember this is not financial advice and this should be used only for educational purposes. I'm going to start with some qualitative stats that Roku posted during this earnings report. For the first time ever, TV streaming devices surpassed legacy pay TV devices in weekly reach in the US, with 65% of adults aged between 18 and 49 streaming TV versus 63% watching legacy pay TV in March. Even if it's not exclusive to Roku, I believe that the trend of streaming is very strong and Roku is a solid gatekeeper towards streaming with more than 60 million monthly unique users. In the first quarter, the Roku channel was a top 5 channel on our platform in the US by active account reach and for the first time by streaming hour engagement. This is another important aspect, more so following the recent pivot from Netflix, where the company announced that it may enter the AVOD, the advertising video on demand segment, sometime during the next years. As a reminder, Roku has built one of the best advertising video on demand platform, with its main puzzle being the Roku channel. As you can see in this photo, Roku is only behind Hulu and YouTube in terms of advertising revenue. In the first quarter of 2022, the top 10 broadcast TV advertisers increased spending on Roku nearly 80% year over year, while spending 7% less on legacy pay TV. This shows that the gap between viewers and advertising is starting to close. I expect this trend to continue, given the high amount of people that can be reached exclusively via streaming now, and I do believe that this gap will continue to close in the future, which will obviously benefit Roku. Next up, we're going to be looking at the KPIs. This is a very important part of the analysis, and I'm going to start with the most important 2 factors, which are the active accounts and the average revenue per user. This shows how many users can Roku attract on its platform and how well can Roku monetize them. Both metrics came in above the analyst expectations, and as you can see in this photo, Roku added around 1.2 million active accounts in the first quarter, while its ARPU grew around 34%. This is a good sign for the company, especially given the macroeconomic headwinds and the fact that the TV sales are still below the pre-pandemic level. As a reminder, the best way for Roku to attain permanent customers is for the people to buy a new Roku TV. Since these 2 metrics are very important for the company, this is the first thing that I would keep an eye on. I would keep an eye on both the ARPU and the active accounts. I do want to see these increasing, especially the ARPU, which shows a better monetization for the existing customers. Next up, we're going to be looking at the 2 operating segments that Roku has, and we're going to start with the player segment. This segment continues to lose money for Roku as the company makes account growth a priority. As you can see in this photo, the gross margin for player was around minus 17%, with a slight improvement from the last quarter of 2021, but still this segment remains affected by the supply chain disruptions and it will continue to take a hit on this business segment for the foreseeable future. Next up, we're going to be looking at the platform segment, which provides most of Roku's revenue. More precisely, around 88% of Roku's revenue comes from the platform segment. This segment contains all the revenue streams for Roku, including the video advertising and the media and entertainment. The media and entertainment segment is used by content creators to cross-promote shows. The company revealed in their earnings report that 25% of all advertising is used to cross-promote shows on the legacy pay TV. This mix of revenue between video advertising and M&A is an important factor for Roku, as video advertising generates a lower gross margin than M&A, and this had a significant impact in the first quarter of 2022. As you can see in this photo, the gross margin for the first quarter of 2022 was only 59%, which was 8% lower than the first quarter of 2021. Next up, we're going to be looking at another crucial aspect for the platform segment, which is the content creation. So far, Roku licensed content from other producers for its Roku channel, but starting with 2021, it decided to create its own content. This major pivot will definitely affect the EBITDA margin and the gross margin for the platform segment. So far, the company didn't disclose a budget for the content creation, but as you can see in this photo, it revealed an amortization plan for the next 3 years. As you can see, around $91 million will be amortized in 2022. However, around 44 million have already been amortized in the first quarter of 2021, so it looks like the company might deviate from its original plan. However, this is not surprising given the competitive landscape that the content creation segment has recently seen. More and more companies are willing to invest big money in order to create original shows. As a conclusion, Roku has budgeted around $160 million for the next 3 years for content creation, but I will definitely keep an eye on to see if the cost for content creation will get out of hand, as I think it is a real possibility that Roku will be forced to spend more than he wants in order to create content for its Roku channel. Next up, we're going to be looking at the financials to see if the margins are deteriorating. Roku delivered on both revenue and adjusted EBITDA. The revenue came in at $734 million as opposed to $790 million expected, but the company missed on earnings with minus 19 cents per share as opposed to minus 18 cents per share estimated. As you can see in this photo, the company had a 50% gross margin for the first quarter of 2022 and expects a 49% margin for the second quarter, which is 3% lower year over year as a result of acceleration in the portion of video advertising, which is a lower margin segment, in conjunction with sustained supply chain disruptions on the player segment. Moreover, the company guided for a break-even adjusted EBITDA in the second quarter as it will pursue attractive investment opportunities, but on the flip side, adjusted EBITDA for the full year 2022 remained unchanged at around $150 million. Next up, we have the free cash flow, which is defined as cash flow from operations minus capital investments. Roku had a very strong first quarter in terms of free cash flow. As you can see in this photo, the company managed to re-enter the positive territory, and free cash flow represented around 12% of Roku's revenue for Q1, which shows a great ability to transfer some of the revenue to free cash flow. Still, considering the investment schedule that the company has laid out for 2022, the expected free cash flow for full year 2022 is around $110 million, which is actually lower than the $188 million that the company had in 2021. This is the third thing that I will keep an eye on, hoping that the company can deliver more free cash flow than the $110 million that it guided for. Next up, we're going to be looking at valuation, and this is a crucial aspect for the analysis. Roku proved in 2020 that it can attain free cash flow and net revenue, as it had a 9% net revenue margin. Still, the management is very confident in the opportunities laying ahead for Roku and is willing to invest heavily now in order to keep the future growth high. As a result, management has guided for a 4% EBITDA margin in 2022 as compared to 17% in 2021. This is a major cut in both EBITDA and earnings estimates. As a result of these significant investments, Roku has become more expensive, as you can see in this photo. In terms of free cash flow and EBITDA, Roku seems to be more expensive than it was just a couple of months ago following the recent change in estimates from the management. To conclude, on the valuation side, even if Roku has decreased significantly in the last couple of months as a result of the management's plan to invest heavily, the company is now more expensive than it used to be a couple months, and so I do expect some volatility going forward. To conclude, I do like Roku. I think that the company will do very well over the long term. I believe in the company, I like the management, and I do think that the company is a buy. However, given the fact that the company became more expensive and we are finding ourselves in a volatile environment, I think that there is more downside for the stock, and I do believe that in spite of a good execution from the company, the stock might be very volatile. As a conclusion, please be aware of the high degree of risk for the stock before investing. That was it from me. If you feel like you've learned anything of value today, or you want to see some more earnings reviews or in the stock reviews, please consider subscribing. Until next time, keep crushing it.